Good day and welcome to my channel. My name is Ebimo Amungo. On my channel, I talk about business, politics, economics, international relations, and sundry issues that affect Africa. Today, I want to talk about the digital economy in Africa. Specifically, I want to talk about African-founded startups. I am posing the question today: if acquisition of African-founded startups by American firms and American investors is at the right price, African-founded startups being acquired by American investors at a cheap rate? I am bringing this issue up when I compare it to other startup acquisitions in other countries and other places. So today I want to start with the news about Andela. News just came out that Andela, one of Africa's most well-known startups, has just raised $200 million in Series E funding that has given it a valuation of $1.5 billion. This new funding brings the total funding to Andela to $381 million. Now, Andela, by this new funding and this new valuation, is the latest unicorn in Africa. Andela was founded in Africa, in Lagos, in Nigeria, in 2014, but it was incorporated in the United States of America. And as at this moment in time, it has its head office in New York. Andela has been able to attract a lot of investors, including Mark Zuckerberg and SoftBank. In fact, there was a time when Mark Zuckerberg came to check out the Andela office in Lagos, and there was this big event made out of it. Originally, the goal of Andela was to help to train junior developers from Africa and place them in global companies. And this was going on until a few years ago when Andela changed its strategy and recently started to represent the interests of senior engineers. And now they have over 80 engineers from 80 countries that they have placed in 6 continents. They are now a very, very big company, much bigger than the initial dream to be in Africa. So in the light of this, it might just be necessary to point out that Andela is now part of the large growing digital economy in Africa that is made up of so many startups. Africa, even though our contribution in the world of digital economy is small, digital economy is now 3% of Africa's GDP. Most of the startup ecosystems are in Nigeria, they're in Kenya, they're in South Africa. And these 3 countries attract well over 80% of all the investments into startups by venture capitalists and investors from America. Many of these startups offer services that include ride-hailing, e-commerce, logistics. Most of them are fintechs. And in the course of their operations, now Africa and all these forward and backward investments, Africa now has about 5 or 6 unicorns. Unicorns are companies that have gained a valuation of $1 billion. But if you compare this movement, this investment, and this amount of unicorns in Africa, you'll see that if you compare it to Israel, a small country, has over 50 unicorns, and India has over 100 unicorns. And when you compare the kind of monies investors pay for the right to be part owners of a company or full owners of a company, it is much more in those countries. By far more in those countries. Let me explain now. Recently, there was a major news of an acquisition by an American payment systems company called Stripe. They acquired a company in Lagos called Paystack for $200 million. I think the acquisition was, well, a whole lot of the controlling rights was done by Paystack. Paystack was founded in Lagos in 2015. Their software allows businesses to access payments via credit card, via debit card, and money transfer. They facilitate payments on the internet for many African businesses and merchants. And within a short time, they were made a target of acquisition, and Stripe acquired them for $200 million. But when you compare the transactions in Israel or even in India, let me give you an example. Intel's recently acquired a company in Israel called Mobile-I. Mobile-I innovates in vision-based advanced driver's assistance systems. They paid 15.3 billion for that acquisition in 2017. In India, Walmart paid 16 billion just to acquire 77% stake in Flipkart, an Indian e-commerce business. And beyond acquiring these African startups, some of these startups are even being made to change their operational basis to America, where probably for whatever reasons, where the investors insist on them moving over. So Andela, which was founded in Lagos, now has its head office in New York. The most famous among them would be a company called Flutterwave. Flutterwave is an African pay tech, and one of the Time magazine's 2021 100 influential companies in the world. And Flutterwave has also raised a lot of money. They raised a total of $234 million in 13 funding rounds. And because of this involvement of American investors, they have been convinced to move their head office to San Francisco in America. Flutterwave is also one of the few unicorns Africa now has. One of the 6 unicorns Africa has. There's also another company called Cheaper Cash. It's a fintech whose platform offers mobile cross-border money transfer services. Cheaper Cash has been able to raise about $155 million and over 6 funding rounds, I think. They were funded by two African immigrants in America, and they too have been made to stay in America. They are very important in facilitating immigrant remittance between America and African immigrants in America and Africa. But they have their head office in San Francisco. So my question now is, why are African entrepreneurs selling their startups so fast and selling them for what I consider to be so cheap? But let's put these things within context. In Africa, money, whatever money that comes into Africa in dollar terms seems to be very big, because many African currencies are losing value. So when an investor comes with $10 million, $50 million, it looks like that money is very big. Beyond that, the initial investors in these small startups in Africa, the people who they call the angel investors, they tend to want to quickly start to share the risk of their investment. So they are very bullish about making other people to come in and have other investors, And Well, these companies were also funded by young men, and many of these young men will look at these amounts of money. I mean, people in Lagos and everything, the 3 million, 5 million, $10 million will look like a lot to them. But in the face of all these things, whether you consider them as cheap or not, I am of the opinion that our startup investors in Africa should continue to invest, take this money, continue to take this money and develop continue to develop their ecosystems, continue to build competence and capacity. They should continue to try to aim at selling. The price might not be nice. It might not be nice now, but they are creating an ecosystem where they are attracting investors, and they will learn skills, they will gain know-how, they will know how to access the capital market much more. So even though it's looking cheap now, it's just where they are in the curve, and so I would tell them, I will suggest that they should continue. My opinions are always stated at the end of my videos that these things should continue, and we should commend these investors who are, even though they are being paid less, they are attracting a lot of interest in Africa and building a growing digital economy and startup ecosystem in Africa. That will be the end of today's topic. If you liked my video, you can give me a like. But beyond that, if you have your own opinions about today's video, if you have your own views about what might be leading to these cheap valuations of African startups, please place it in the comment below. If you like my video or you want to get more content from me, please press like and subscribe. Thank you for watching the video today, and I will continue to make more videos for you. Thank you. Have a blessed day.